Hi friends, welcome to our first non-welcome episode of this channel. So thanks for joining me. So in the coming weeks, we are going to talk about all the fun that is tax and accounting when it comes to the cryptocurrency space. But before we can get into that, we need to start with the basics. And in my view, that means making sure you guys all understand why you need this channel and why you need to care about the tax and accounting of crypto and all your activity and your investing related to crypto. So we start at the beginning. So what I find is so many people are convinced that they don't need to concern themselves with the IRS's guidance because they believe that their crypto investment is completely anonymous. And I get that because that's kind of what a lot of us are sold on, right? That this crypto space is anonymous and that nobody knows what we're doing on it. That's not true, okay? That's not true. But what we're gonna do is talk about what is anonymous and then go into what isn't. So time out. Before we get started, I gotta tell you guys, I use the terms virtual currency and cryptocurrency interchangeably. So when I'm saying those two things, know that they mean the same thing, all right? All right, don't wanna confuse you. All right, time in. All right, so for now, I want you to focus all your attention on this one line, okay, you guys? Your decision to engage in virtual currency does not shield you from filing or paying taxes related to that cryptocurrency activity, all right? Basically what that means is if you're invested in cryptocurrency, you have obligations and duties to report it. Cool? All right, so let's talk about what is anonymous and why we think that the crypto space is anonymous, all right? So we start with the blockchain. So if you're unfamiliar or new to this space, so the blockchain is the virtual ledger that tracks all of your cryptocurrency transactions that have ever occurred. Not just yours, everybody's, all right? And so the blockchain says user A paid user B this much cryptocurrency, right? So the anonymity piece comes in that user A and user B, that part omits personal information, all right? So if this is a bank transaction, bank A would have your routing number, your account number, your name, which is related to your social, and they would also have user B's accounting, routing number, name, all that such stuff, right? When you're trading cryptocurrency on the blockchain, that user information is omitted from the blockchain. It's not in there, okay? It's not in the public general ledger, okay? But the general ledger is public, and I think it's important to know that as well. So the point is, users can send and receive money without directly revealing any of their identifying information. All right, so that's where we say that crypto is anonymous because the blockchain, the ledger, the space where those transactions are tracked is anonymous, okay? But that doesn't mean that these investments are invisible from the IRS, and let's talk about why and what that means. So I'm gonna present this to you as 4 fun facts. Okay, so fact number 1. So you guys, the government actually hires blockchain miners. Miners, M-I-N-E-R-S, like a miner. So they're the ones that dig into the blockchain, right? They dig into your data and they pull out the user data from the public blockchain. All right, miners. So if you didn't know what that means, there you go, miner, just like a miner, because they're digging for information. Clever, right? So anyway, the point of that is the government hires miners to dig out information. All right, fun fact number 2 is that the IRS has been working with blockchain companies since 2015. So yes, crypto's been around a little bit longer than that, but most of us that are invested just got, most of us got invested between 2013 and 2016, or maybe even later, okay? So they've been working with blockchain, the government, since 2015. In 2017, the IRS won a landmark lawsuit against Coinbase. Coinbase is a cryptocurrency exchange, one of the main ones. And the lawsuit required Coinbase to hand over data on all customers who had bought or sold at least $20,000 in crypto between 2013 and 2015. And I know most of us that are on here, if you're listening, think about back to 2013 through 15, most of the people investing in crypto were, I don't want to say the founders, but it was new. to the public back then, and lots of money was being dropped. So that list of users was long. All right. And then most recently in 2019, the IRS has sent 3 rounds of notices to taxpayers, the latest round being back in August. And that letter was sent to over 10,000 investors who had been what the IRS calls discovered. And what that means is the letter was sent to taxpayers and it was very vague, but it stated that there may be discrepancies between your filed tax return and the records that the IRS received from fund houses, employers, and the like. That's it. That's all it said. There may be discrepancies. So what they're doing is they're putting the responsibility onto the taxpayer to go back and look at their tax returns and see if there indeed were discrepancies to file, to amend. So you guys, it's so important that the IRS, that you guys know that the IRS is going to close these gaps on anonymity of virtual currency users. Let's learn to speak. Here we go. So you guys, the IRS is going to close the gap on virtual currency user anonymity. It's an area that the IRS is pressing super hard and growing in right now because they recognize that there is so much potential lost revenue out there that they want. They want their cut. So ignorance is not a defense. You have to know that if you are invested in crypto, you might have some tax liabilities in there. So next week, you guys, we are going to talk about the IRS guidance that has been issued. There's only been 2 pieces ever, one in 2014 and one just this year. So we're going to talk briefly about those pieces. So you guys hopefully then have a foundation for when we then dive into our 4-part series where we talk about each of the taxable activities. My goal is that after that series, you'll have a better understanding of whether or not you actually have some taxable events in 2019, or if you maybe have some taxable events from prior years. And if a yes comes up during any of that, reach out to us. We do crypto tax. That's why I'm here to help you guys. We offer free consultations. So if you, as you're watching this series, if you feel like, oh crap, maybe I might have something that I need to go back and fix from prior years, talk to us. We'll look at it for you. We offer a free consultation. We'll talk about how we can help you. All right, guys. Thank you for joining me. Please subscribe so you guys are notified when new episodes drop. And also let me know what you guys want to hear, what you guys want to see on future episodes so that I make sure that I am feeding you guys the content that you request. All right, guys. Thank you. Have a good one.